Hey, what's going on, guys? Welcome to another video, and today I am going to be talking about Arrival stock, ticker symbol ARVL. Now let me just say this is probably going to be one of the most important videos that I make before we get to earnings, and so let's just go ahead and get right into it because we do have a lot to cover. So today it was announced, well, the company Arrival announced that it will report their financial results for the fourth quarter and full year ending December 31st of 2021 before the US markets open on Wednesday, March 2nd of 2022. So yes, Arrival will be reporting earnings on March 2nd of 2022. The company will host a corresponding webinar at 8 o'clock a.m. Eastern Time on that day, and best believe that I will be dropping a full analysis on the earnings when they come out. But for now, I think it's important that we go back and really analyze their Q3 earnings, because their Q3 earnings actually wasn't good at all. And in my opinion, it's the number one main reason why the stock has tanked so much. And so I just want to say this. I'm still a bull on Arrival. I still own the stock. But I think it's important that we're honest, because at the end of the day, this is our money. You don't want these things to turn into a cult. You want objective, real, honest information, and that's what I'm going to give you in this video. And so let's just go back and look at their Q3 earnings. So in their Q3 earnings, they reported that loss for the period of $26 million compared to a loss for the period of $22 million in the third quarter of 2020. Adjusted EBITDA loss of $40 million compared to a loss of $18 million in the third quarter of 2020. Administrative expenses of $38 million and non-capitalized R&D expenses of $9 million compared to administrative expenses of $20 million and non-capitalized R&D expenses of $1 million in the third quarter of 2020. Capital expenditure $81 million compared to $21 million in the third quarter of 2020. Cash and cash equivalents of $381 million as of September 30th, 2021. And they grew their employees by a lot, which you would think would be good, but not so good because they got to pay those employees. And Arrival's already been spending a crazy ton of money, but they approximately have 2,400 employees at the end of the third quarter of 2021 versus approximately 1,200 employees at the end of the third quarter in 2020. So they've doubled their employees, and I don't know where all these employees are coming from because they don't have that many factories, but I'll shut up. They're working on it, So just looking at more financial data, you can see here that their net income cost went up significantly from 2020, from September 30th, 2021 to September 30th of 2020. You can see that their net income cost went up significantly. You can also see that their loss before tax went up significantly, like a lot, like more than double, like a 6x dang there. Like this is a lot. Loss for the period went up significantly as well, and total comprehensive loss for the period went up as well. So as of right now, this company is just a money losing machine. They are just burning through cash, absolutely burning through cash. And that's something that, in my opinion, is very important to take note of and understand. Now, let's look at their 2022 forecast and long-term outlook. Now, remember, this earnings report came out on November 8th of 2021. So this is what they said that they expect 2022 to look like. So let's just go ahead and read their forward-looking statement. They said Arrival previously provided long-term forecasts in connection with its merger with the CIIG Special Purpose Acquisition Company. Since then, Arrival has invested more to further develop its platforms and to secure components and batteries for production. As a result, Arrival has revised its microfactory rollout and now expects significantly lower vehicle volumes and revenue in 2022. That's a pretty big red flag, because they're already telling you right now that we don't expect 2022 to be much better, and we expect not just lower, but we expect significantly lower vehicle volumes and significantly lower revenue. And I'm gonna tell you guys why this is bad, because for those of you who've been investing as long as I have, I was in Arrival back when it was CIIG. That's how long I've been an investor in Arrival. And for those who were in Arrival back then, when they were a SPAC before they even became Arrival, they had all these crazy projections and, you know, we're going to have these vehicles out in 2021 and we're going to start delivering and we're going to do this. And now they're completely revising and going back on everything that they said, which it's starting to make sense why they've got all these lawsuits and why some people are just really upset with the company because, you know, I'm not going to say they lied, but they did kind of mislead investors. I'm just going to be honest here. They misled investors a little bit because these projections are completely different than the projections they had back when they were a SPAC. So let's continue reading. Future growth is dependent on the number of microfactories the company can deploy, which is a function of its access to capital. As a result, Arrival's previous long-term forecast from the merger should no longer be relied upon. I mean, good grief, that's horrible. Let me read that again. As a result, Arrival's previous long-term forecast from the merger should no longer be relied upon. I mean, when you go back and look at their Q3 earnings, it makes sense why this company essentially went from like $20 or $17, whatever it was, all the way down to $3 where it is now. I mean, that's pretty horrible. I mean, if I'm a hedge fund, if I'm a big money investor, I don't like that very much. So you're telling me that we should no longer rely upon the forecast that you first set when you guys first became a SPAC, when you guys first launched as a SPAC and merged and became Arrival? Like that's horrible. Like what the heck? Like what happened? So let me just keep going. Bus and van production volumes in 2022 are expected to be modest because 2022 is the first year the company is starting production, and it is now expecting a more conservative ramp in each of its first 3 microfactories. Arrival expects to start each microfactory on one shift and does not expect them to reach full capacity until early 2023. Furthermore, due to capital constraints, Arrival has moved its 4th microfactory to 2023. Translation: we don't have enough money and we need more money. And this makes sense because you see here it says, furthermore, due to capital constraints, Arrival has moved this 4th microfactory to 2023. Now, if you guys remember, after Arrival had their earnings call in Q3, they actually did a share offering. So it kind of makes sense. I mean, they're kind of telling you everything that you need to know right here in this earnings report. We need money. And yeah, after that happened, they did they had a share offering. I'm sorry. Yeah, they had a share offering, and it makes sense. They need money. So that's not good. So let's just keep going. Revenue is expected to start to be recognized in the second half of 2022 and will be weighted towards the 4th quarter. These expectations are dependent upon the successful completion of certification of Arrival's vehicles. Okay, so they're telling you here that for their earnings call that is going to be taking place March 2nd of 2022, don't expect them to report any revenue because they don't even expect to have any revenue. They don't expect for revenue to be recognized until the second half of 2022. So that's another thing to keep in mind right there. Moving on, Arrival continues to expect van microfactories to produce 10,000 vehicles per year when they reach full capacity on 2 shifts, and the company's future volume mix to be even more weighted toward van as it continues to see strong interest in the platform. See, that's not good to me because when I look at something like a Tesla, which is expected to produce like 1 million vehicles per year in their gigafactory, or even somewhere like a Lucid Motors, I don't know. I mean, it might be different for Arrival because Arrival doesn't necessarily make cars. I mean, they do, but their main focus is like vans and buses. So I don't know if, like I said, I don't know if that's good. I think the better indicator for us to determine what that looks like for Arrival is their revenue. We need to figure out how much revenue are you getting? How much money are you making from these vans and these buses and all that stuff? I think that's what we need to find out. And that's going to be the key. And just so you guys know, even though Arrival has a deal with UPS, they haven't gotten paid any money yet. You know, they're not making money yet. UPS is not going to pay them until they produce a car. They have to deliver a car first before they get paid. So just keep that in mind. That's important. Moving on to this other section. From a cost perspective, Arrival currently expects full year 2022 adjusted EBITDA and CapEx to be in range generally consistent with the 3rd quarter of 2021 on an annualized basis. That's not good either. They're telling you right now they expect next year to be no different than last year. They don't expect 2022 to be any different from 2021. That's literally what they're telling you here. Moving on, over the next several years, Arrival expects to continue to capture additional efficiencies in its microfactories and achieve total capex per microfactory of approximately $50 million. Arrival also plans to continue to lower the OPEX requirement. I don't think I need to read all of this. Yeah, I don't think I need to read that. Sorry, guys. Let's move on. Despite revisions to its 2022 expectations, Arrival believes its unique products, technologies, and platforms position the company for significant growth in the next several years. Arrival is now months away from delivering its vehicles to customers. Yeah, that's not good. They're basically saying, I mean, I'm just being honest with you guys. I still like the company. I think I told you the main reason why I invest in the company is because I like their vehicles. I really do. I like their vans. I like their buses. I think they look really nice. And I like the microfactories idea. I really do. I think it can change and revolutionize the way that people build cars. I really do. I think that's cool. But their management is so bearish on their own company. That's just not good. Like, they're basically telling you, let's read this again. They said, despite the revisions we made to our 2022 expectations that are completely different and a lot more bearish than the original expectations we had when we first merged and became a publicly traded company, Arrival believes that its unique products, technologies, and platforms position the company for significant growth in the next several years. Arrival is now months away from delivering its vehicles to customers. Yeah, I don't know. That just sounds kind of bearish to me. I don't know what's up with this company. I don't know if we might need a management change, but I'm starting to lean in that direction. I'm sorry to say this. You guys know there's no emotion here. You know, we're here to make money at the end of the day. We're not here to be friends with these people. You know, we're not here to be buddy or anything like that. And I did hope that I'd be able to maybe one day interview the CEO or the president, but probably not going to happen anymore because now I'm starting to lean towards they got to go. You know, we'll see how this next earnings report goes. I think the Q4 earnings is going to be very key on the outlook for 2022. And it's very possible because based on how bearish they were in their Q3 earnings report regarding their financial outlook, I think it's very possible that 2022 could be another bad year. It may just stay at a penny stock for the entire year, and we may just have to continue to wait, which is okay as long as they're making progress. That's what scares me. Like, are you making progress? Are you growing? Are you getting things together? Are you just blowing through a bunch of money? You know, because right now they're just blowing through a bunch of money. Like, how are you spending all this cash and nothing's getting done? Where's the bus? Where's the car? Where's the van? Where the factory? I mean, they did just open up a new factory. I'll give them that. They just announced that they are opening up a new factory. They got the approval, so that is pretty cool. But I just want to give you guys objective of information here. I know this is probably the first sort of bearish video I've made on Arrival. Everything else has been always positive, but I just have to be honest here. I'm a little nervous about their Q4 earnings, and I'm also very interested. I want to see what they have to say, but they kind of already told you in Q3 what their Q4 earnings is going to look like, and it's basically going to look a lot like Q3. And I can tell you right now, if Q4 comes and all they did was lose more money, and they don't announce anything exciting like, hey, here's the car, she's ready to go, hey, here's the van, you know, if they don't do that, it could be bad. Like, this stock might go to 50 cents, you know, I don't know. But either way, let me say this, I am still positive on the future outlook of Arrival. I've said this many of times, do not put a risky stock like this as your like largest holding or anything like that. You guys know Tesla is my largest holding. Arrival makes up a small position in my portfolio. Still bullish on the company. Haven't sold one single share, but it's rough right now. You know, it's definitely rough. But I do remain bullish for the future. We'll see how things go. I think management has to get it together, and I think they deserve some criticism. You know, they did not do that good of a job. I'm sorry, they just didn't. And they need to get it together. So we'll see how Q4 earnings go, and I'm still optimistic about the future. So yeah, thank you guys so much for watching. I really appreciate you guys tuning into this video. So thank you for watching. Feel free to like, share, and subscribe, and I will see you in the next one.